Hey, how you doing? Camera 4 here with the 4 group. Okay, we're simply using real estate as a vehicle to create indestructible wealth for ourselves and for our investors or our partners. Okay, how do we do this? As real estate entrepreneurs or matchmakers. Okay, we analyze cash flowing opportunities. And we find the best acquisition and deposition angle for that property. Okay, and when we exit a deal, our aim, if we're just flipping it or wholesaling it, is to leave the end buyer with as much equity as possible. Okay, we want repeat buyers. Okay, now. Just a little bit about us. We're real heavy marketers. Okay, so we're marketing, times 3. Yep, for deals, dollars, and tenants. Deals is new opportunities. Properties that are for sale. And maybe they're pocket listings. Maybe I found them on LoopNet. But deals, nevertheless, we want to constantly market for deals, keep our pipeline full. Next, we want to be not marketing for dollars. Marketing for dollars. Dollars are our potential investors, okay, and partners in business. The ones who invest their money so that they can get a return on investment. All of our investors, we build into each deal control. Okay, we build in control so that they have control over their money and they understand that how they're going to get their principal back. Right. Before we talk about the return on money, we want the return on investment. We want to talk about the return of your principal. Okay, so we first address that. We have low risk investments. Okay, low risk investments. Also high returns. We have very high returns. Okay. So with that said, lastly, we're marketing for tenants. We always want to be marketing for tenants. Okay. Some properties we might want to change the tenant mix a bit, but we're constantly adding value to our properties, looking to force appreciation so that we can. So that we can add some value, get some equity there, right, for ourselves and for our investors, right? That's number one. That's number one. As soon as we come into a property, we're looking to add value, right? We're looking to value add, all right? Everybody on our team, just so you know, just transparency. Everybody on our team must be able to analyze a deal. And see, I spelled analyze wrong, but you know what I mean. So everybody needs to be able to analyze a deal, the numbers. For multifamily, for commercial property, the aesthetics of the property are not, they don't really matter like a single family home. What you have to understand is for multifamily and for commercial real estate, the only thing that matters is the numbers. The numbers need to add up, okay? The numbers need to add up, okay? And what I mean by the numbers, I mean the financials, okay? Usually on your ads on LoopNet or online, they'll give us basic information, NOI, cap rate, market cap rate, but whatever information we have, we want to plug that in, and whatever we don't have, we want to then find that information and make sure that it's correct, okay? We want to evaluate the deal. And how do we evaluate this? We need to find our NOI, our cap rate, our cash flow, and our cash in the deal, and our cash on cash return, which is our new cap rate, and how much we will receive in interest at the end of the year if we pay for it in full. Okay, but these are just a few of our terms that we use to analyze the deal. Once we analyze that deal and find out if it's a good deal or a bad deal, okay, then we're going to step 2. Step 2 is reaching out to the broker or to the owner to get those financials and to get our T12 and to get our rent rolls. Okay? But more on that next time. Cameron here with the Ford Group. Invest with the best.